Buying some equipment and want some mega tax relief? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And some important news to come out of the budget in 2021 was this news of the Super Deduction, as it's known. I don't know who came up with that name, but hey, it's semi-cool, I guess, but the Super Deduction. And what that's all about is a relief that allows you, when you buy the big stuff in your business, so be it computers, vans, equipment, that type of stuff, this new Super Deduction is going to be an option to you for certain new items. And in this video, I just want to touch on the top level stuff like we always do. With anything to do with tax, there are some really detailed provisions and sort of criteria as it goes, but I'm going to give you kind of the highlights in this video so you can see how it might benefit you. So before we get into it, if you like these type of videos, click the subscribe button below so you get notified whenever we release more just like it. Now onto the Super Deduction then. So what is it? Well, for you limited company owners, it's a new type of deduction, and that's really important. Unfortunately, if you're a sole trader or a partnership at the time of recording this video, there isn't an equivalent for you. And I think part of the reason that we actually got this, and when we talk about how the tax relief works, is that they're going to be increasing the corporation tax for very profitable companies in a few years' time. They're going to move that corporation tax up from 19% to up to 25%, depending on kind of how profitable you are. And this relief kind of offsets some of that. So I think that's why it's probably slightly restricted only to limited companies. It kind of offsets it. So it makes sense. So that's where we are. So limited companies. Now, there's detailed criteria as to what you can buy. But if you think when you're buying for your business big stuff, so if you're going to buy a new MacBook, for example, for 2,000 quid, we're going to talk about how that works in a minute. Think like that. Vans, not cars, vans, equipment, diggers, cranes, drills, all that kind of stuff. Things, high value stuff that's going to last for more than a year. Think those kind of things. You might also see websites and software and things that you might be investing in. So just think, those bigger kind of things that you're going to be using for multiple years. So as I mentioned, in terms of what qualifies for the Super Deduction, there are quite a few rules. But the main thing is if you're in business and you're buying these assets for your business, so again, computers, vans, tools, those kind of things, then you're generally going to qualify as long as they're new. And this new scheme runs from the 1st of April 21, so it's in play now, right the way through to the 31st of March 2023. At the moment, obviously that could change, but currently that's where we're at, so it's quite a long time scale to get going. So if you're going to be doing it, now's a good idea. I'm going to talk about right at the end about the best time to kind of use this allowance, but just note that it's quite a wide window. So whilst I'll never say to you, go and spend money to save tax, because obviously you're going to be spending more money than you are saving it. If you are going to need stuff now, then now is obviously going to be a really good time. So how it works is like this. Let's say your MacBook example, you're going to spend £2,000. You're going to get what they call 130% tax relief. Now, that doesn't really mean a lot to a lot of people, but let's just think about it like this. Every pound you spend, you're going to save about 25p, so 25% basically. That's how it kind of works out in reality. So that £2,000 MacBook saves £500 of tax. It's only really cost you 1,500 quid. So that's pretty good going, really good tax relief. And it all comes off in 1 year you buy it. So in that year, if you spent £2,000 in your accounts, you're going to be able to reduce that tax by 500 quid on that next tax bill in 1 year. And that's not actually the default for how big stuff works. So for a lot of big stuff you buy, let's use a car, for example. If you were going to go and get a company car, and aside from electric, that's generally a bad idea at the time of recording this video, but let's say you were, then actually you might get some small percentage each year, and it takes years to get your full relief. But with this particular relief, you get it all in one go. Now, there is kind of another relief I'll touch on later that does this as well if you don't qualify. But if you do qualify for these things, as we say, you're buying new, and that's the biggest thing, you're a limited company buying new equipment, then the majority of things are going to be covered by this, and you're going to save a good amount of money. So when's the best time to buy stuff to make the most out of this? Well, you've got quite a long time at the moment in terms of when this relief's available, but the best time is before the end of your next accounting year. So if your next accounting year is till the end of October, then you want to buy your stuff and renew your equipment, things like that, before the 31st of October, because that's kind of when the line's drawn. They're going to draw the line and say, right, here's your tax bill for that year. So to bring that bill down, if you're going to already be sort of redoing and rebuying equipment, refreshing it, buying new stuff, invested, do it all before then, and that's going to maximize when you're going to feel like you've got a tax bonus. Because if you imagine if you left it into the next year and bought it on the 1st of November, it's probably the worst time, then in that particular example, then you're going to have to wait a whole year before you actually end up feeling like you're going to save any tax. So definitely do it just before your year end. Now, I did mention there are some other reliefs in terms of if the super deduction doesn't apply. So if for whatever reason you couldn't get the super deduction, there's something called annual investment allowance that's been around for many years. And it works in a similar sort of way. It gives you the relief in 1 year, but it only works at 100%. So at the minute, it's like 19% saving rather than a 25% saving, basically. So still good, still gives you the relief in 1 year, but it's not quite as good. So the super deduction is really good. And for those non-limited company business owners, then, that annual investment allowance is still open. There's also some other things, again, it's probably too deep to get into in a top level video, but there are some other assets that don't qualify for either of those two, but might get what they call enhanced first year allowances. So there's quite a nice little boost to that as well. So speak to a professional if you've got any questions on your particular thing. But if you think general stuff like, using those MacBooks, vans, that type of stuff, it's very much going to be in the super deduction realms and worth looking at. And that's it. If you enjoyed these type of videos, make sure to subscribe, share it with anybody that needs to know this information, and we'll see you in the next one.